Now, the ASEAN Summit in Kuala Lumpur has just wrapped up, with President Marcos backing ASEAN's collective stand not to retaliate against the United States, despite Washington's move to raise tariffs on several trading partners. Instead, the president is calling for dialogue and diplomacy while pushing to strengthen economic ties with Gulf states. Now, back here at home, the Philippine economy is at a turning point, with inflation at a 5-year low and the Bangko Sentral ng Pilipinas now signaling 2 possible rate cuts in the second half. Joining us now to break it all down, from growth forecasts to trade and policy signals, is RCBC's chief economist, Michael Ricafort. Hi, Mike. Nice to have you with us.
Yeah, good morning, Mike, and to your viewers.
Okay. Let's start with the ASEAN Summit. They just ended with a decisive decision not to retaliate against the U.S. tariffs. They took a safer, softer, more diplomatic approach. What are the economic upsides and economic downsides to this for the Philippines?
Definitely, Mikey, this is more or less adhering to the internationally accepted and actually generally and universally acceptable standards that would be, well, it's a really matter of containing the tensions and not escalating. We have seen that in China. So when they retaliated, so the situations, well, we have seen the escalation of the tariffs, but now it's already behind. They already fixed it. The tariff between U.S. and China sharply reduced from 145% to 30% on U.S. imports of Chinese goods, and the response of China just 10% from 125%. So yeah, because that's also the signaling from the Trump administration. If it's they prefer better constructive cooperation, trade talks, negotiations, and that's the way to go, because this is a situation now. It's better to deal with it in the highest form of diplomacy as possible.
Yeah, it's a very conducive approach. Okay, Mike, moving forward, let's talk about tariff exposure. At present, Washington's reciprocal tariffs for the Philippine goods, is at 17%, which is lower than Malaysia, Indonesia, or Vietnam. Does that lower rate give our exporters a real edge, or do higher power costs, thin margins, are they still the bigger hurdle? What's the big picture here?
Yeah, Mikey, that's still a good sign on the Philippines. But because largely the determination of the reciprocal tariffs by the U.S., it's really based on the trade deficits of the U.S. with the various countries. So it goes to show that we don't have much trade surplus with the U.S., meaning they have less trade deficit with us. It's relatively negligible. That's why they only gave us 17, whereas our neighboring countries are much higher, somewhere between 20 to almost 50%. As so that's the math and science behind it. That the wider the trade deficit of the U.S., the bigger their net imports from those countries, the bigger the tariffs have become. Although it's paused now, it has been paused for 90 days since April 9th until July 9 at a baseline of 10%. That's why, as we mentioned a while ago, those who behave, those who don't retaliate with China, they get to enjoy the 10%. China now is given 30%. And now, at least, markets are, surprisingly, the markets reacted positively, because there's, that's a constructive approach being used by the EU. Okay. So they're not really antagonizing the U.S. And the markets took that positively. That's why U.S. stock markets are again near record highs, hefty gains of between 1% to 2%.
Yeah, we saw sharp gains overnight. Taking a look at exports as a share of our GDP, Mike, roughly how much of today's GDP is from exports, and how insulated are we just in case trade tensions worsen?
When we look at it, Mikey, the Philippine exports, when it comes to contribution to the economy, and the relative size of this is the merchandise or goods exports. For the Philippines, it's relatively lower compared to more developed ASEAN countries like Thailand, Indonesia, Malaysia, Vietnam. They're like 3 to 5 times higher than us. And the total, the problem is selling to the U.S. because they have the tariffs there. But for the other countries, not much of a problem. So and then amid the free trade agreements as well. Now, uh, the total Philippine exports, the the biggest share goes to the US. That's 17%. So there's a need really to diversify away. So
Mm-hmm.
that's a similar problem with the other countries. Especially, it's a bigger headache for our neighboring countries because uh,
Correct.
the export-oriented ones. Because where will they sell?
Yeah,
Meaning
it's
they
a
have to think
bigger
a lot.
headache for them. But for us, as we look to diversify to other markets, how urgent is that need given that we still face a 17% tariff and they face steeper duties? How urgent is that need right now to diversify into other markets? And who should we look to first?
Yeah, that's the way to go, Mikey. In fact, well, over the weekend there have been talks already with for a possible free trade agreement with Canada. That's the next door neighbor of the U.S. And we have so many free trade agreements already in place. We're in a free trade environment with the FTA partners for the past 10 to 15 years. You have the U.S. ASEAN Free Trade Agreement since 2010. We have JPEPA since 2013 with Japan. And practically many countries here in this side of Asia, in the Asia Pacific region. We have
Mm-hmm.
well, multilateral FTAs, ASEAN, other than ASEAN China, ASEAN Japan, ASEAN South Korea, ASEAN India, ASEAN Australia, New Zealand. So it's really a matter of tapping, well, at least that's the stance, tapping further these free trade agreements, no more tariff whatsoever, and of course exploring new markets, uh,
Yeah.
bigger markets like in the Middle East. We have seen that during the ASEAN talks, some collaboration, and there have been talks also to come up with additional free trade agreements with other Middle Eastern countries, and also in Europe. Although we have GSP plus there, uh, and many other continents like South America and even Africa. So to complete, it's the irony of it all. The U.S. is the biggest export market of the Philippines, accounting for 17% of the total, and yet we don't have any free trade agreement with them. Maybe this is worth again, uh, well, to explore. Though realistically, there's so much process involved. It may have to
Yeah.
go through Congress, through the lawmakers, just like
Yeah.
what we saw. The latest one that the
Yeah.
country had was with South Korea
Okay.
since the late last year.
Mike, you mentioned Japan earlier. I want to get your insights. Germany just overtook Japan as the world's top creditor nation. This is a first in 34 years. I just wanted to get your insights on where you think global money is moving and how this might affect the Philippines in terms of foreign direct investments and trade.
It coincided with the fact, Mikey, that there's been some shift from the dollar. The dollar's gone down, the lowest in like 2 to 3 years versus major global currencies. We have seen the euro strengthening on a year-to-date basis by almost 10%. We have seen the yen also appreciating by nearly 10%, even the Swiss franc. So away from the US dollar, some sell off, and even gold appreciated by about 25% year to date. So the appreciation of the euro is among the highest in like 3 years since February of 2021. It may have to do with that in terms of valuation. Some ships into it became one of the safer havens away from the dollar. It's just fair because from 2022 till like late last year, we have seen a stronger dollar.
Mm-hmm.
The yen coming from 115 in 2022. It was triggered by the Russia-Ukraine war, higher inflation worldwide, and the need to raise interest rates from record levels during the pandemic. So the dollar was strong past 3 years, and now it's the other way around. Inflation has been contained. There's a need to cut rates even before the
Yeah.
Trump factor.
How might
So
that
we can follow.
affect the peso dollar pair, Mike? Right now, the peso is up by 4% year to date. We're hovering at around 55.25. How do you think all these shifts will affect our currency?
But the peso has benefited from that because we came from 51 3 years ago. We reached a as high as 59, uh, but that has been respected. That cap there at the 59 for more than 2.5 years, so from September 2022 till the last time we saw it was December 19 of last year. So
Mm-hmm.
it's been, we're at 55 levels, 55.60 as of this morning. So 55 is halfway between 51 and 51 low prior to the Russia-Ukraine war and the 59. So we're just in line with the major ASEAN currencies on a year-to-date basis. We're very much similar. So we're
Mm-hmm.
moving as a group for the past 3 years. When we all the dollar went up, we joined all together. Now that the dollar is going down, we're moving all together as a basket.
Mm-hmm.
So we cannot really veer away from that. And you know, uh, the 55 is the mid. That's a midpoint. We still have remittances
Mm-hmm.
this time of the year for tuition payments, and
Mm-hmm.
that's one of the peculiar factors supporting the peso. From the point of view of the dollar earners, still a net gain of 4 pesos from 51. Now it's 55.
Okay.
And then from the point of view of the importers, so this is also halfway. Well, well, it's meeting in somewhere in between. And from 59 now it's 55. We're a net importing country. We're gonna benefit from it. You know what's happening around the world?
Mm-hmm.
With a weaker dollar, it's gonna our trade deficit last year was like $54 billion. So it's gonna make imports cheaper.
Mm-hmm.
And for domestically focused companies and conglomerates, I've been very busy past month presenting all of these things to the biggest businesses and industries. With all the trade war, the higher tariffs, that resulted in lower commodity prices. Oil now is at among 4-year lows
Yeah.
since April of 2021. Even natural gas, coal, even other commodity groups like even rice. Rice is the lowest in
Uh-huh.
more
Mike,
than 20
taking a
years.
look at our growth story, GDP forecasts, all things considered, the IMF pegs Philippine growth to come in at 5.5% below the government's 6 to 8% target. This is for the full year. What are your house views for Q2 GDP and for full year GDP?
Well, for second quarter, 6% is still possible because of the election-related spending. And at least the easing or benign inflation trend would also help. Other than that, yeah, we have seen increased government spending, especially on infrastructure, employment is still the unemployment rate at 3.9. That's still decent.
Mm-hmm.
It's still among the best levels in 20 years since revised records
So
started.
6% for Q2, and what was that for the full year 2025, Mike?
5.5 to 6%. We already
Five and a
reduced
half
that.
to
It, it,
six.
it
Okay.
was originally 6 to 6.5 because of the global factors. Now it really depends on Trump. Where will he set the tariffs
Yeah,
eventually?
and how
I
much
think
of that, Mike, is hinged on expectations of rate cuts in the second half? BSP Governor Eli Remolona Jr. hinted at 2 rate cuts in the second half of the year. Do you think the first, well, not the first, but the next one will be coming on June 19th when the Monetary Board meets next?
very much possible, Mikey, because we have inflation is so benign. It's at 1.4%. It's still possible. Maybe for the next month, for the month of May, it could is somewhere around the 1.2%. So we're below the target, the BSPC inflation target of 2 to 4%. So all the more that further monetary easing in terms of rate cuts is
Mhm.
still
How much
very
more,
much.
Mike? How much more, Mike, in the second half in terms of rate cuts?
Well, additional 50 basis points.
50.
That's
Okay.
prudent because that's also the signaling from the U.S. Central Bank, from the Fed. They have been consistent with that since December. Uh, 50 basis points cut this year, 50
Okay.
basis points cut in
All right.
2026,
One
25
last
basis points cut
question,
in
Mike, because we're kind of
2027.
out of time. In terms of investment rerouting, the midterm elections have just concluded. The cabinet is kind of in flux as they change things up a bit, though the economic cluster is intact. As an economist, and once the dust settles on all of this politics, where would you like to see the government prioritizing their next moves?
Well, it's still on creating that's a role of government, or well, at least stronger rule of law, institutions of law. Other than that, policies that would further promote economic growth and development in in a more inclusive manner. And the potentials are there. There are still gaps to be addressed on infrastructure, further speed up many of the infrastructure projects, especially mass transport systems. So enable to boost productivity and attract more FDIs and more foreign tourists. So I'm excited about the subway project because it's going to connect into the airport. But of course,
Yeah.
we have to be patient as to the because among the gaps like the right of way issues, the permits, the ease of doing business, the cost of doing business, to also attract more foreign direct
Yeah.
investment. So it's a matter of coming up with more policies, uh, creating an environment that's more conducive for business to grow, more investments to come, more jobs to be generated, and further boosting the productivity of the economy.
Yeah, absolutely.
Greater education, the biggest equalizer, especially through STEM courses and technology, also the biggest equalizer because adopting the best technologies especially for agriculture, for manufacturing, to further boost productivity and reduce costs, and create more jobs, higher incomes for everybody else. That would also expedite the achievement of the middle income country status of
Yeah,
the country.
absolutely. Mike, thank you so much for your time. That was Mike Ricafort, Chief Economist of RCBC.
Thanks so much, Mike, and to your viewers. Good morning.